Late, so
okay. All right. Well, everyone, mute yourselves, be quiet, and just listen. Simple rules. All right. Scott Steele, floor is yours, sir.
Thank you, Robert. Actually, I love interaction. So I got the mouse right here. I'm pretty tech savvy. So if you have a question in the middle of this thing, I love that. The more you guys ask, the more you're involved, the more you learn, and the more information I can give. So Greg asked me to jump in literally a couple hours ago to handle this. So I'm going off of his notes and what he's prepared. So what we're going to talk about today is contingencies. And more importantly, how the contingencies affect the lenders, or how the lender can help or hurt with contingencies. I mean, both sides, so that you kind of know where we come from on the lending side. And so all of you should have the attachment that Greg sent out about 9:30 today. I just printed out a copy for myself so I can show you guys. But I mean, I would just jump right into it. Obviously, most agents should know contingencies, or CR, contingency removal. Those are the protections that the client has for their deposit. Okay, there's a number of contingencies: inspection, appraisal, and let's see if there's any. It was another one: loan and loan are the kind of the three contingencies that we have, and we want to touch base on those so that you guys know where lenders come from. And some things that maybe you didn't know, that's actually very, very important. So starting off, he highlighted the initial deposits. That's important for us to know your EMD. So that right there, line 3D1, that is the amount of money that your buyer is putting up and can potentially lose if and when we remove contingencies. Okay, so that amount of money, the EMD or earnest money deposit, that is what they're ponying up and saying that they will give to the buyer, to the seller, should we not fund. Okay, super important. He had mentioned that he highlighted the seller's initials here. Obviously, all contracts we need, lenders, have to be fully executed. This one is not. So that's what he wanted to bring up there. Greg did. The second page of the RPA is actually the meat and potatoes for the contingencies, I believe. And in there is box L. Box L is our contingencies. Starting off with loan. So typically loan has 17-day contingency. This is important. All the contingencies are important. And what's super important for the lender is when we know that you have an accepted contract. I can't tell you how many times I have an agent contact me on Wednesday and say, oh, over the weekend we got accepted. Where are we at with the appraisal order? What? We got accepted? Like, I don't, unless I'm included in that accepted offer, accepted email, I have no idea. Now I've lost 3 days, right? So I'll start off by saying actually communication, letting us know that the minute you get an accepted offer or you got a verbal accepted offer, let us know so we can get started, right? We want to get them running on these things because we have a very strict timeline on these. So loan starts off at 17 days is how many days we have to hopefully get to clear to close. CTC, clear to close. We don't have to be clear to close, but that is the best. That is the best way to make the buyer feel comfortable. I have instructed buyers before to, that there's no red flags on the file if they chose to remove the contingency, right? So loan typically 17 days. Make sure, again, communication. If your lender is strong enough, knows the file well enough, has the documentation to escalate that. I see a lot of agents. I don't feel like right now, and I would love to see some hands in the air. I don't feel like right now we're in a market where we have to escalate to get accepted. Do you guys agree with that? Thumbs up. Are we in an escalated market right now? No, we're not, or we need to. Right, Rochelle.
Sometimes we do, yes.
Okay, all right, no, good, okay.
Yeah.
That's why I wanted the feedback. So if we are, great, but make sure you talk to us first so that we have that file set up to slam through, or else we can get stuck on those timelines, obviously, right? Appraisal, that's a big one too. If your lender doesn't have income, if they are ordering the appraisal, that that to me is a big one for lenders. The appraisal is a real big one for lenders because we can't get that money back. Should they close because the loan can't fund, we can't get that appraisal back. So as a lender, I like to at least have income cleared before I order the appraisal. I want my underwriter to say, yes, there's no red flags on the income so that I can spend that $600, $650, $1,300 for some of you $1 million properties. You know, they can get expensive and there's no refunds on that. Okay, so that's super key to get that back. Additionally, I always tell people that it's usually a week for them to get out there and a week for the report. So you're looking at 14 days just to get the appraisal. For some of you that were on when we started, Robert asked a great question about, you know, how do I get my offers accepted as a lender for my agents? And that's one of them. I get a call, I called a listing agent, you know, and I said, hey, how, you know, what can I do to get this thing accepted? Literally, I said that to them. What do you need from me for your seller to accept our offer? And they'll say, well, explain to me, you know, what about you know, how fast can we do this? Well, the things I can control, the documentation, all that, I can get through on this file and, you know, easily in 20 days, no problem. I was like, I can't control the appraisal. I have no problem ordering it quick, but it might take 2 weeks for them to get out there and get me the report. So as long as you're flexible on the appraisal, because I have no control over that, then we can move forward, right? Again, that communication is key. So appraisal, 17 days and really 14 days just to get it. So that's a tight one. I see some people, you know, rushing those. Again, if you as an agent rush that, you're spending their money, right? Because if you do that, a 10-day appraisal, here's what I always tell my agents, and I tell listing agents when I call them, is what they want to see is they want to see the person spend the money, right? A listing agent, a good one, and again, I'd love to see some thumbs up. In my experience, a good listing agent just wants to see the client pot committed and spending money. So what I like to see, instead of rushing that timeline because we have no control, is to tell them we'll order it within 48 hours of acceptance. We'll spend the money, but we can't control how fast it turns around. And they're like, perfect, no problem. As long as we're spending the money, that's what they want. Does that make sense to everyone? Do you guys agree with that as listing agents? That's a good rule. There, thank you, Gabby. I got one. Oh, thank you, Tyrone. Thank you, sir. Okay, so that's a big one. Instead of escalating that because we have no control, you don't have any control really, let's see about doing that just as an idea, okay? Investigation of property. This is actually an important one that you guys might not think involves the lender, but the most important thing about investigation for us is your due diligence to know if this home is insurable, okay? I'm talking about homeowners homeowners insurance. We can later on in the RPA, it talks about it, but the investigation of property also includes making sure it's insured. Why is that important right now? CAL FIRE. CAL FIRE, the California FAIR Plan, it is a disaster on top of a dumpster that is already on fire. You know, in a positive way. Greg said keep it positive. It's a disaster. And so what that's doing is we're getting I had one where the CAL FIRE yearly premium was $4,600. Not even including the rider or piggyback or whatever they call them on top of that. And with that, he did not qualify, okay? So it is important right now, while we still have these FAIR Plan rules and nobody's insuring these high fire areas, if you're doing business in a high fire area, to find out if that home is insurable. Get that homeowners association quote going, find someone you like and get it going immediately, because you need to know if this isn't a CAL FIRE, because that can hurt the deal. Okay, now let's talk about one quick fix to that if your lender is strong. I'm getting lots of calls today. If your lender is strong and knows what they're doing, the CAL FIRE, if the client pays 40% up front, they can do it on their own and not be escrowed. Okay, so they pay 45% up front. It doesn't get escrowed, so that $300, $400, $500 a month policy is not included in our debts. But we need to get ahead of that. So having HOI, super important. Good. Any questions on those? Oh, hold on, got a chat. Boop. I have to, oh, thank you, Robert. He had to go somewhere else. And how do I close? I'll leave it open. So
I have a question
Miss
about the
Gabby.
insurance. Okay, is when you talk about insurance, are you talking only about CAL FIRE? Because I heard, it didn't happen to me, but I heard that some properties, they didn't close escrow at the end because the property has a lot of claims, so the house was not able to get insurance. So you guys handle the insurance portion. How do we handle, we make sure that everything is on time and pretty good with the insurance situation?
So that's a great question, Gabby. Thank you for making it interactive. So listen, I do for my clients, I do have a go-to homeowners insurance rep that I send right away. I just send them the 1003s, they have the information and they quote them. So I do that immediately and get a quote already, so I know what's going on for my clients. It is not the lender's, this is very important. It's not the lender's responsibility to order or have a homeowners insurance. It is a real estate, and that's why it's on investigation of property. It's real estate. We need it, right? But it is not a lender specific item. So unless your lender does that for you, it technically falls on you to find that out. So to answer your question, how do you? I mean, get a good solid rep. Sorry, guys. Get a good solid rep that you can call. I give you, if you guys can email me, text me, message me, and I can send you. I got a guy, Spencer at American General, and a lady, Jamie Jacobson at Jacobson HOI. They're brokers, and I get a response the same day. You know, so that's key, and they look it up right away and get it right away. Did that answer your question, Gabby?
Yeah, so that one that will be falling in this case, in the 10 days of investigation of property.
Correct. Yeah, and when we go through it, I'll touch on it because it's actually in the contract. It states that verbatim in the contract.
Perfect.
All right, so
are we still asking for the clue, whatever is the name?
the clue report. So some properties, and this is going out of my purview because I'm not HOI, I just say take care of it, right? I know that sometimes some properties require those, and that takes an extra little bit of time. Again, that's why my reps, when I send them the information, they'll respond within 30 minutes, say this one needs a clue report, I'm on it, give me a day or two. So at least I know it's, you know, so again, great point. To be honest, and I don't know if this is good or bad, but I'm transparent. I have no idea what a clue report is or does or means. I just know that it takes a day more for me to get my quote. Sorry, guys.
Okay.
I don't know that.
But I heard that a lot of insurance situation is happening lately. So this is why I'm asking. Thank you.
I love it. Thank you, Miss Gabby. All right, so continue on from his, let's see. He said the FHA, so continues to have that. Additionally, if you're doing an FHA loan, then you need to have the FHA VA amendatory clause. That is in addition to the appraisal clause. That's like a backup. And there's no way to waive that. People, even when you waive the appraisal on an FHA, if you, as an agent, if you say on here on the contingency, we waive it, the FHA still covers you. So it's kind of a, you know, a double like a double-edged sword. So you're kind of lying to the listing agent saying, well, we don't care about the appraisal because we're still covered by the FHA amendatory clause. Okay. An appraisal. Okay. So you want to mention appraisal has to come in at value. So it's important to note that if the home comes in under value and the sellers aren't willing to negotiate at all, then whatever percentage we need down to qualify, say 10% on the file, we would now need of that amount plus whatever gap from the appraised value to the agreed upon purchase price. So if we had a $500,000, purchase, they're putting 10% down, 50 grand, and we're all good. The appraisal comes in at 450. Now the client needs to bring in 45,000, so they're saving 5. But they got to bring up 50K on top of that. So now they're out 45. So now they're actually out $90,000 for the same exact home if you can't negotiate down that. So it's important to know that the appraisal is important and definitely affects the out of pocket more than even some people think. Okay. All right, if we move on, the next part he has highlighted is page 5 of 16. And that is going over the appraisals and what that's number 8. So if you don't have it already highlighted, number 8 on page 5 goes over the contingencies and removal of contingencies. And that's how you protect the EMD. Long story short, if you don't release, you have, can I have the PDF? Can someone who knows Kaz send them the PDF? It was sent at like 9:20 this morning by Greg. Kaz, I apologize. I'll get it to you later on. I don't have a computer in front of me. Or if you grab an RPA, you just open up an RPA, I'll give you the page and number. Kaz. Okay, so if you go over this, this basically states that unless it's in the contract that the contingencies are removed upon deadline, regardless of confirmation. Can you speak on liquidated damages? Thanks. Well, I'll do my best on that, Tracy. I'm not 100% sure on that one. But let me see. So the squirrel, the contingencies, unless if we don't sign the contingency removals, then the contingencies are still in place. This is key, and again, why having a strong lender and a communicative lender is important, because I've had a few files where we've gone over on timeframes. But if I reach out to the listing agent and explain to them, listen, we're super close. The client isn't comfortable removing contingency until we have CTC. We are in CTC review and should have an answer within 24 hours. So even if you hit us with a notice for form, we get 2 days anyways, and that's what we need. So instead of rallying everybody up, if you can buy us a day and a half, we'll have more information. Thank you so much, Scott. Oh, that makes me so, oh, you're so, boom, boom, boom. Completely different story than notice for form, right? Communication is key. So
Scott, what is CTC?
Oh, I apologize. Clear to close.
Oh,
Clear
thank
to
you.
close. That's when the loan or the bank has said that we have proven the loan to them and we no longer need any documentation to fund on the buyer's behalf.
Thank you.
No, of course. No, thank you, Miriam. Okay, so let me read through this real fast because I didn't get a chance. Go ahead.
It's Agnes. So at CTC stage, clear to close stage, is there a remote chance that the loan may not go through?
Oh, 1,000%. Life and stupidity. So actually after CTC is when they do a verbal verification of employment. I haven't had it, but Greg has told his stories to us in training that he had 2 files, actually both of them with the same job. He just got 2 clients. They both retired. They literally put in their 2 weeks when they got clear to close. They told the client people were done, we're retiring and moving to our house. The lender, after clear to close, after CTC, does what's called a VVOE, or a verbal verification of employment. The lender called the employer and said, just making sure Bob still works there. And they said, absolutely, for 2 more weeks. They said, what? He put in his 2 weeks, he's quitting. File's dead, blew up, lost the home. Can't do it. Okay. So, and then additionally, if your buyer goes out and buys a Tesla, buys a car, does something that throws your debt to income ratio off, they do right before funding, they do a soft pull and check to see, did anything change, right? So again, clear to close means we've proven there's a loan. Thank you, Gabby. Good job, Gabby. Thank you very, very much. Clear to close means we've proven the loan. Doesn't mean we are, I tell people, don't buy anything, don't do anything, don't move money until you have keys in your hand. That is the only time you are done with this. If I tell you we're clear to close, they tell you that the title recorded, we're done, say, great, put keys in my hand. Until keys are in my hand, then don't do anything. Okay, that's why I tell people. Agnes, does that answer your question? Nailed it. Let's see. So actually, on the contingencies, as I mentioned, I was going to bring it up. 8A2 is where it says investigate the insurability of the property. So that's exactly what I meant about if the property can in fact be insured by HOI. That is it's real estate related, and that is 8A2, investigation of insurability. So that's where that falls into place. Let's see here. Appraisal. So loan contingency. A good lender can deny a loan for any reason or get a good reason. I don't know how this is recorded, so don't want to get in trouble. A good lender can get you a denial if your client wants to back out within your time frames and keep their deposit, right? They just get cold feet, life happens, XYZ. There's a million things that we can do and say, and chances are there's parts of the file that we're not showing the lender or the bank that we can just show them and kill the file. So on the loan contingency, that's pretty easy. That's your best bet of getting out. And that states that if the loan is not fundable, the bank denies the loan, then the buyer gets to keep their deposits. They get their earnest money, EMD deposit back. So that's what I mean by if we have to get a denial letter, typically, if we're going to go that route, and that's loan. Appraisal contingency, that's if the appraised value does not come in at the value that you guys have agreed to, then they can back out and keep their deposit within the time frame, which is also why I always tell people not to escalate that, because again, if we're at 12 days for an appraisal report, and you have a 14-day, that gives you, the agent, 2 days to negotiate, technically by contract, to negotiate something without them hitting you with a notice for form, right? So again, escalating the appraisal one, to me, it's just something I don't like doing. Again, because there's ways around it. If you put no appraisal contingency, if you check that box on appraisal contingency, that means that if the value comes in 100 grand under, you are still going to move forward. Or technically, it means that you will not close or not back out because of the appraisal. Now, again, if you've done no appraisal contingency but haven't done the loan, you have a loan contingency, then the loan can't be funded because the appraisal is too low. So you're still kind of covered there, right? Does that make sense? A little bit? So as long as you have one or the other, you should be solid. Let's see, that takes care of that. Any questions on the contingencies? Did I explain that well enough for everyone? Thank you, Miss Gabby. Good. All right. The next page, removal of contingency or cancellation. He made a note for me to say how to extend. I touched on that, but I'll do it again. So the removal contingency, everyone should be familiar with the CR, contingency removal form. If not, I would definitely look it up in your zip forms or whatever you use. Tyler, I love you, buddy, but you keep calling me. So again, the CR removal is stating that you are removing one or all or multiple of these contingencies. All right, so you can just remove one. You could say, we're just removing the investigation, the home is, we've come to an agreement on the condition of the home. That one's done, and not remove the others, or you can check there's a box for remove all XYZ. As he mentioned right here for my notes, give me 1 second. Tyler, I'm doing training, buddy. I love you. I'm doing training. I can't answer, but okay. Well, hold on. Go ahead, Tyler. This is good learning for everyone. Go, hurry.
Hey, you have to submit an offer within the next 5 minutes.
Okay, you have the pre-approval package.
Can you update the DU with a 435 minutes?
I cannot in the 5 minutes I have training. Just let him know. Let him know I've already reached out to the lender. This is good. See, I've already reached out to the lender. He will get an updated DU for you within the next hour. He's in the middle of a training class. Just let him know. All right. Bye. Okay. Sorry. That's a big agent of mine. So removal condition, again, right there. You know, I need something. Your lender should answer as much as they can. And again, just as long as you communicate as an agent, for you new agents, the worst thing you can do is not communicate. If you tell the listing agent, hey, this is the approval package that I had, but we now changed the price, we're getting a new deed for you within the hour. No one's going to say, forget this and throw it away. They'll say, thank you very much. Okay, communication. How to extend. So if you were to extend this again, having the lender reach out, let them know, express to them, we are really close to the end of this. If you cancel on us, if you hit us with a notice to perform over this and we cancel, nobody will be able to purchase the home, close the loan faster than I can right now. We're close, they're just nervous. Buy me a few days, we'll have CTC and everything will be all done. Or you cancel, start all over again and do a whole new 30-day process. What is more important to your client? You know what I mean? Because at this point, if you back out, your client gets nothing. That's what you're fighting us over is the contingency. So you back out, yeah, we've lost $1,000 on home inspection and appraisal, but you've lost a whole month of this transaction. So again, and then you can be nicer. This is just me talking to you guys. And of course, you know, you sweeten it with jelly, but again, just communication's key on that. So that's any question about removal. Perfect, pretty easy. All right, moving forward. I think, let's see, investigation of property. Again, Greg just wants to point out again, number 12, sorry, on page 9, number 12.2 again says investigations is part of the inspection of property contingency portion, the insurances. So that's 12.2, 12B2. Let's see, following the period, time periods may only be extended, altered, modified. Okay, number 14 on page 10. Again, the following time periods may only be extended, altered, or modified, or changed by mutual written agreement. So unless in the contract it states that the contingency periods will be removed upon time frame, right? A really, really good listing agent will put that in there. Unless it says that, they can't cancel on you or they can't do anything. They have to hit you with a notice for form, even if you're 4 days, 10 days over your time frame. You know, we're 20 days in, you haven't sent any CRs, contingency removals. They can't do anything except for hit you with a notice for form, which buys you 2 more days. Okay. And let's see here. I think the last one is just the addendum that the text overflow addendum he brought out. So the very last page of your PDF that he sent out this morning, and Miss Gabby put in your chat box, thank you again, is just, you know, the terminology that's used, inspection, investigation period to be 10 days. So I'm not sure, this was kind of redundant because they put 10 days on the contract. So you wouldn't have to write it again. You're just, you know, reiterating what you've already stated. Sale is contingent on buyer's rental in Arkansas. Here's a big one and a good one that I just did for, I mentor real estate. I don't do my own real estate anymore. I just mentor newer agents. And we had one where we were making an offer and they had to find a replacement property. And so I instructed my agent to put on the text overflow or the other terms, contingency periods to start upon accepted offer of seller's replacement property. Because here we are, we now, if we don't do that, we have 17 days to prove that this thing's all good, but they might back out because they can't find a replacement home. So knowing your contract and knowing these things is super key because your job and only job is to protect your client's money and not be sued, right? Those are your 2 jobs. Don't be sued and don't lose their money. So the best way you can do that is knowing your contract, knowing these things. So again, if you state, you know, inspection, contingency periods, and again, I'm analytical. I'm not expressionist like Robert is. I'm analytical. I literally say, you know, go back to it. I will say, RPA 3L1 through 8, all contingency periods, right? That's what my term says. I don't say contingency periods. The more you are direct to what it is, the better, and you look more professional, in my opinion. But you know, box line through 3 of the RPA L1 through 8, contingency periods not to start until seller finds replacement property. Opens escrow on replacement property. All that good stuff. That's again protecting your clients. They don't have to spend money until you are more comfortable that there's a loan and something there, deal there. Okay. And then last one is both escrows to close concurrently on the 17th or sooner. So that's a good one right there. At least that right there states, it gives us a date that we have to be done by, so we can backtrack how long it takes to do one of these, to do this. So again, RPA is super important. Terry does a great job of going through everything. He wrote half of it as far as I understand. So that's a great class to be in. But as far as lenders go and what we look for, the big things, communication, get us once you have a verbal, if you're like, they're accepting our offer, even if I waste my time and they end up not doing it, I'd rather know immediately that we have an accepted offer, so I can put the file to the bank and start my end. Even if it blows up, that's fine, I can stop. But it's more important to me to get started so I don't mess up on my timelines than anything else. That's kind of what I see for contingencies. Do we have any questions? Tyrone?
Yeah, can you repeat that statement again regarding the contingencies and?
Fantastic, yes. So I would say RPA 3L1 through 8, contingency, and actually I use the verbiage they use, so contingencies. Now I would say contingency timeframes not to start until, or contingency timeframes to start when seller opens escrow on replacement property.
Okay, great. Thank you.
Okay, that to me is about as clear cut as it can be. You know, there's no kind of, you know, wishy-washy. What did you mean by that on there? So that's what I would do.
Okay, thank you.
Of course. Any other questions? Anyone's got any questions or thoughts? We have a few. I think we have a few more minutes, or actually we have quite a bit of time. Sorry, I don't have the stories that Greg does. He's a wealth of knowledge. I'm analytical and just jump to it. Can someone tell me, did Robert send you guys that pre-approval package? Maybe you guys received that email. Did he send that to everybody?
Robertson one, or did
Miss Gabby, can I send this to you? Can you throw that up there like you did for everybody? I think this is a little bit of I think I have Miss Gabby. Gabby at Citrus? No, Gabby, what's your email? No.
Email. Let me put it in the chat.
Please and thank you. Also, just as a side note, and if you guys are here, and that's thank you. Oh, Kaz wants it. Okay, I'll send it to you as well, Kaz. Kaz. Are you able to send it to everybody, Kaz? Or is this just to you?
What are you going to be sending, Scott?
No problem. I'm going to send a pre-approval package. I think this kind of goes along the same lines of the communication and everything.
Okay.
And so that way you guys can just get an idea of what I provide. Not saying it's the greatest and best. I'm very proud of it. .com, and let me send this to and Gabby. Sorry guys, just 1 second.
That's okay.
I'll take one too.
Well,
Yeah,
she's
me
gonna
too.
post it like she did a second ago.
Oh, okay.
CRIBY Homes at is it Gmail? Where'd it go? Gmail. Okay, perfect.
Yeah.
Okay. Oh, and there you are. Boom. Okay. So you should have that in a moment. What I'm sending is a and she'll link it like she did the other one for everybody, so you guys can all grab it. What she's sending is what I call my pre-approval or DULP approval package. The first thing Robert asked me when we first started was, how do I get my offers accepted as a lender for my agents? You know, I was very, very lucky that, you know, they announced I closed 4 loans this month, and I have approximately I have 27 escrows between Mobile and Park and Standard Homes. Currently I'm doing loans for. Thank you. And so it's in their chat box. If you want to open your chat box, you can click that file, 1.41 megabyte file. Thank you, Gabby. And my biggest thing is communication. I'm big on talking about on communicating with the listing agent and everybody of what our needs are, right? So that they know. I've had, FICO scores of 510, it was actually 507, got accepted because it had everything laid out in there for the agent and explained why it was a doable loan. I'm trying to pull mine up so I can see it next to you guys. Okay, so most of us, anyone that cares has it open? Anyone that wants to be, okay. So first page, simple cover letter that tells them what they are, because most listing agents are lazy and just want to see the first page, right? So this is what you're going to see if you go through it. Great. All right. The second page is the toilet paper, right? The paper that just has information on it. This is important. If your lender should be telling you what we need in a loan because it affects your RPA, right? And so I list everything on here. I show what the purchase price is, the down payment, because you guys need to know what the down payment is for your RPA. I have their credit score, the type of home, single family or manufactured, I don't care. This one, I knew they were making an offer on a manufactured, so I threw it on there. But the type of property. So, as an agent, when you go out and you show them a condo, and then you call me and say, Scott, why aren't we going to escrow? And I say, well, the condo, the HOA kicks us out. That's why I'm very direct on these are the properties that can be done. The type of loan, again, on your RPA, and then occupancy on the RPA as well, important, primary, secondary, or investment, okay? So all of those should be somewhere on there, or at the very, very bare minimum, they should be communicated to you so that you know how to fill out the RPA. Make sense? Yeah, I got some heads nodding, thank you. All right. Next page after that, third page, is the first page of the credit reports. There, again, this person happens to have a great credit, but I don't care what it is. I'm going to show you because I'm not going to lie to you about it. It's all a doable loan. So there's all three credit scores. Bam, right there. Page after that, actually, the next few pages is the full DU. This is every page of the. DU is desktop underwriter. There are two major players in lending. It's Fannie Mae and Freddie Mac. Fannie Mae does DU, desktop underwriter, the more well-known one. And then Freddie Mac does loan prospector, LP, not widely known, but has a lot of good uses in it. So you can just scroll through and see that there's here's everything about the person, top to bottom, fully approved. On this one, I had both the LP and the DU, so I included the LP. Here's the loan prospector, approval. So this guy is fully approved, good to go, no questions asked. And then the proof of funds. Please, please, please get your proof of funds from your lender or learn how to redact. I see so many agents send proof of funds with full account numbers, their addresses, stuff that they probably wouldn't want you to be sharing. Because that's not your wheelhouse. I get it. Either learn how to redact, which is cover things up, or have your lender provide it. All they need is page one. They don't need to see every transaction. In fact, I block the transactions. They don't need to know if this is an OnlyFans person, right? They don't need to know. Not one. Okay, one. Thank you for the laugh. So this shows, again, it shows everything on there, and that's the full complete package. Why I showed this is the last six offers that I've got accepted, I've been cross-qualified on all 6 of them, and all 6 of them, the email went to the other lender. The lender emailed the agent with all of us in there and said, "Everything's perfect. Thank you very much." I didn't even speak to the person because it's all right there. There's nothing hiding, nothing that they need to see or ask about. So I passed pre-quals. So if speed being the first one at the top of the list is important, having something complete like this is important. Okay. And again, I'm not trying to sell myself. Then you can send this to your, you just say that I want something like this from your lender, whatever. But again, just lay it all out there. There's no reason to hide anything in this industry. If it's a doable loan, but it's ugly, still doable. I don't care what it looks like. Does that make sense?
Yes.
Any questions about that or feedback? I see a lot of very colorful, pre-approvals about the lender and how amazing and handsome the lender is, which I can clearly do. But that's not important to the loan, right? It doesn't matter that you've done 1 million of them, because this client is not 1 million of them, it's this client. And so I don't understand or comprehend the idea of, again, just the pretty colors and, all these things. Here's the nut and bolts. This is a doable loan. Here it's prove it's doable. Let's open escrow.
I have a question, Scott. So going back to getting the earnest money back to our buyer when the loan is not approved, can you clarify that again?
Yeah, sure. So if you're gonna cancel the transaction before the contingency removal of the loan has been signed, then you can cancel saying that the loan has been denied or the client wasn't approved for the loan. That just means that the client, I don't know how to explain that. That just means that the client doesn't meet the requirements. Case in point, a lot of lenders don't do the forward work or get a lot of the documentation up front.
Okay.
They don't get the information up front, and so they don't know the full package. Actually, again, now I'll go into a story like Greg. So Santiago we broker through Santiago for the mobile and parks, and I've hit it out of the park with mobile and parks. And the reason is Santiago sends an application. If your lender sends your client an application and that's it, and just says, fill it out for me, I would hesitate using that lender. And the reason being is that they only know what they know. I have so many clients who I call and say, yeah, I make $6,000 a month. Great. Are you W-2'd or self-employed? Yeah, I get paid cash from my buddy over here. Can't use that. Right. And so a lot of times, if the lender doesn't have the documentation or hasn't asked those questions, as simple as that, then they go in there, they say, okay, the underwriter says, great, you're approved. Now show me how you make your $6,000 a month. And they say, oh, I get paid by my buddy cash. And the underwriter says, denied. Right. That would be like a very direct way of explaining. So then you say, hey, the loan's, it's denied. We can't get a loan for this buyer, so we are canceling. Please send us our earnest money deposit back.
Perfect. Thank you.
Of course. I love it. Please, another one. Please, guys. We got about 5 more minutes, something like that. And Kyler's waiting.
Poor Kai.
No,
So you also are taking care of requesting the proof of funds and everything for a client. All the financial part, you take care of that. You don't kick some stuff to the agent, correct?
I love that question, Gabby. Your $5 is in the mail for asking that one.
Yeah.
So that's a great question. So again, I get a lot of agents, and I've talked about this in Covina when I was down there, luckily, is I get a lot of agents say, what do you want me to do? And I say, nothing. I need a name and a number. That's what I want. A name, a number, and maybe a time if they're very strict on when they can talk. That's what I want. The reason being for the same reason. They'll tell you, I make 10 grand, I have a great FICO, and I've got lots of money to put down. I've had that conversation. I say, great. How much money do you have to put down? I've got $5,000 saved. Okay. You know what I mean? Because $5,000 to them is a ton of money, right? But we typically need more. So to answer your question in a very long about way is, yes, I don't expect you guys to do anything. Of course, you guys can talk with them. I do say that if you ask them questions, let me know what they say, because I always want to look like we are one and the same, because the more that we're in communication and have the same responses, the smoother it is for the client. But other than that, no, I do everything. I request all documentation from them. I'm their point of contact. I do everything that is financially important. I provide the proof of funds for you, mainly because I see so many, again, that aren't redacted to protect their information. And as you can see, I send all of my PDFs, and it's all one PDF. It's not 7 files that you have to keep track of. I lump it all together in one file, so you just have to send RPA and pre-approval package. But yeah, I don't expect you guys to do anything except give me a name and a number, and I will go from there. If that answers your question, Gabby.
Yes, it does. Thank you so much, because it happens to me in the past that they send me the approval letter only, no proof of funds. I say, how can you approve somebody if you didn't see the bank account? You know, it's a little bit for common sense, you know,
Here's
and that
what
is
I'll tell you.
important.
Yeah,
It
no,
is
I
important
agree.
that you do your job and I don't get a step in your job, and you don't, you know, I don't do escrow, I don't do lending. So I want to refer business to the people and I say, you have a lending question, talk to the lender. You have an escrow question, talk to the escrow. I am not one of those.
Yeah,
you know.
no, I love that response, and I think that's also a professional response. Everyone thinks they have to be at all things and know everything. I mean, earlier on this conversation, I said, I'm not HOI. I don't even know what a clue report is. I just know it costs me a day, right? I stay in my lane. I always advise and try to help, especially newer agents, you know, to get them going. But I stay in my lane in lending. That's what I do. And I want to, you know, and I try to take care of it from jump for you. What I will say in the same breath is technically as a lender, the only thing we're allowed to do is get verbal information, right? And run their credit. That's the only thing we're allowed to do before producing a pre-approval. So lenders that do that, they're not doing it wrong. They're just doing the bare minimum. We are supposed to go off of what they say. You know, in fact, we're not supposed to ask for any private documentation until you move farther. The problem with that is I've seen too many blow up because, again, like I said, what they think they make, have, or do isn't provable to the bank, right? Again, there's two different worlds in conversation I literally have every day with clients is, I know you make money. I know you're self-employed and you're killing it and you got your beautiful Maserati, but you tell the government that you make 20 grand a year, and that's what I have to go off of, right? So, but they say, no, well, my business does, you know, 60 grand a month, and it probably does, but you write it all off. There's life and there's what you tell the world. And I have to go off of what I can prove the world, not off of that, unless we do a bank statement loan and we can go on to that. You know, there's a million ways to skin that. But again, yeah, I don't expect anything. Any other questions? I got a couple more minutes. I see even Robert bounced back on. So I'm assuming you guys have another one after this. Anything else I can assist with?
No, you're going till 3 o'clock.
Nope.
Do you want me to share that? Do you want me to share that McKinnis DU LP package?
Gabby took your job. She put it in the chat box, but yes, for
Got
those
it,
that are in the
Robert.
chat box, you can
Hey, look
definitely
at, look at,
Robert.
I'm a big fan of people doing my work.
Amen. I love it. I love it. Okay. Well, listen, I think that's good. I hope I answered your questions, guys. I hope I was okay standing in for Greg. And if you have any questions, you can reach out anytime. Okay.
Woohoo!
Okay, thank you.
Thank
Thank
you.
you.